Since I'm only going to get to do this once around this discussion, I wanted to raise another issue that layers into this and ask for your thoughts on it. There's a new report out. I hope you've seen it. It's from Harvard Business School professors Michael Porter and Jan Rivkin. And the report is called An Economy Doing Half Its Job. Now, here's what the researchers find, and I just want to quote it to make sure we get this exactly right. They find that corporate profits in America are at an all-time high, and the Dow Jones Industrial Average continues to hit new records. But living standards for the average American have fallen over the last 15 years. Porter and Rivkin from the Harvard Business School note that this recent divergence of outcomes with firms, especially larger firms, thriving and workers struggling is unusual in the United States because, quote, American companies and citizens have tended either to thrive together or to suffer together, but no more. Now, there's a pretty simple explanation for this recent divergence. Corporations no longer share their prosperity with their workers. They share their prosperity only with their shareholders. According to research by Professor William Lazonick of the University of Massachusetts at Lowell, back in the early 1980s, large corporations dedicated less than half their earnings to their shareholders. The rest went to investment in their equipment and in their employees. But from 2003 to 2012, those big companies dedicated 91% of their earnings to their shareholders, either in the form of stock buybacks or dividend payments. Now, why have companies shifted their priorities so dramatically in such a short period of time? Well, because CEOs are now compensated almost entirely based on the company's share price. As a result, CEOs love buybacks and dividend payments because they boost share prices, even if they come at the expense of long-term investments in the company and in its workers. So here's my question. If we can't count on CEOs and senior management to reinvest at least some of the corporate profits in their workers like they used to, what steps should the government take to fill that void? And I'd like to hear from all of you. Ms. McGhee, would you like to start?
Thank you, Senator Warren. That is an excellent question, and it really goes to the heart of what our economy is for. Demos has been doing some investigation into these issues of how much increasingly large, low-wage employers that are extremely profitable are financializing, essentially, and concentrating the effort, the result of the production of their workers. My colleague, Catherine Reuschlin, actually wrote a report on our country's largest private employer, Walmart, who spent $6.6 billion just last year buying back its own stock in the market. And she calculated that if that money were instead invested in the human capital of the workers who make that wealth, it could give the lowest paid workers, those who make under $12.25 an hour, which is almost 1 million Walmart workers, a raise of over $5 an hour, just from what they spend buying back their own shares. So this has a very, very real effect on the working lives of workers and families. So some of the things that government can do.
You have to say, and to think about what it would mean if that million workers made $5 more an hour in terms of what they could buy elsewhere in the economy, and the overall growth in the economy and growth in jobs. Growth in demand, growth in jobs.
Exactly.
Sorry, Ms. McGhee, I didn't mean
No, absolutely, because low-paid workers are the job creators who are waiting to have more money in their pockets to spend in our economy. I'll just say a few things that could be done. One, Congress could stop giving preferential treatment to this kind of income, to wealth income, stocks, and dividends over work. It's important to remember that less than half of Americans own any stock at all. So when we give this preferential treatment, we have to remember to whom it's going. The part of the picture of that declining ability for the people who are actually doing the work to get a bigger slice of the pie that they spend all day baking is the decline in unionization, which has also been as a result of policy choices. So Congress could pass, for example, the Employee Free Choice Act and make sure that there is more collective bargaining power in our economy and in our enterprises. Thinking about all of that money that unfortunately is not going to the public good in many, many cases, you have to look at the effective corporate tax rate. Their Institute for Policy Studies shows that 26 of our biggest corporations spent more, paid their CEOs more than they paid to the government in taxes. So we should be closing tax loopholes and havens and ensuring that corporations, which are at an all-time high in profitability, are sharing some of that revenue, and we can make a new commitment to the quality of life of all Americans.